Today we're diving into a nice gem in the US tax code that could potentially save you thousands of dollars, and you don't have to have a business. The tax play is called the Augusta Rule. Ever wondered how you can earn tax-free income from your home that is completely legal? Today I'll explain exactly what the Augusta Rule is, how it works, and where you can find it in the tax code. Let's get started. So, what is the Augusta Rule? Well, it's officially called Section 280AG of the Internal Revenue Code, but it's known as the Augusta Rule because it was inspired by homeowners in Augusta, Georgia. Back in the 1970s, when the Masters Golf Tournament took place, local residents began renting out their homes to spectators for short stays. These rentals brought in a lot of income, and Congress saw an opportunity to give them a little break. That's when the Augusta Rule was born. The rule allows homeowners to rent out their primary residence for up to 14 days per year and keep the income tax-free. Yes, you heard me right, completely tax-free. If you rent out your home for fewer than 15 days in a year, you don't have to report that income to the IRS. It's like money in your pocket that Uncle Sam doesn't touch. Here's how it works in real life. Let's say you live in a city where there's a big event, maybe a sports championship or a festival. You decide to rent your home for 10 days to out-of-town guests. If they pay you $500 a day, that's $5,000 of rental income. Normally, rental income would be taxable, but under the Augusta Rule, you don't have to report a single dollar of it as long as you stayed within the 14-day limit or less. The key here is the 14-day rule. If you rent for 15 days or more, that income must be reported and taxes will apply. So keeping track of the number of days is crucial to maximizing this benefit. Now, if you're curious where to find this in the tax code, you'll want to look at Section 280AG of the Internal Revenue Code. It states that if a property is rented out for fewer than 15 days per year, the income from that rental is excluded from gross income, meaning you won't be taxed on it. But just a word of caution, this applies only to personal residences. If you're renting out a vacation home or property you rarely use, there are more detailed rules to navigate. Consulting a tax professional is always a good idea. So how can you use this rule to your advantage? Let's say you run a small business and you occasionally hold team meetings at your primary residence. As long as the total rental days for the year are 14 days or less, you can rent out your home to your own business and not pay taxes on that rental income. But remember, the rental payments must be fair market value, the rental agreement must be legitimate, and it must be a business meeting. Keeping a copy of the agenda for each day you rented your home to your business is a best practice to keep in mind as well. Or let's say you don't have a business, but you live in a city with big tourist events. Think about renting out your space for a few days. The same rules apply, and it's an easy way to pocket some extra cash without any tax burden. Just keep the total rental days to 14 or less for the year. The Augusta Rule is one of those little-known tax breaks that can have a big impact. Whether you're renting your home for a few days during a special event or using it for business purposes, it's a great way to keep more money in your pocket, legally and hassle-free. But remember, the IRS loves documentation, so always keep everything in order. So while this rule can be incredibly beneficial, make sure you're following the rules. That means maintaining proper rental agreements, making sure it's a true arm's-length transaction, and keeping it all well documented. If you found this video helpful, make sure to hit that like button and subscribe for more information on taxes. Also, leave a comment below if you've ever used the Augusta Rule. And don't forget to share this video with someone who could benefit from this tax-saving tip. See you next time, and stay smart with your money.